Good afternoon, everybody, and welcome to today's webinar, episode number 9 of Association Continuity in a COVID World. My name is Craig Vaughn. I'm the president of Castle. For those of you who don't know Castle, we specialize in the management of condominiums and HOAs, primarily in the state of Florida. We partner with approximately 300 associations through 7 offices and 1,750 teammates. I want to welcome everybody back for those rejoining us and welcome any new webinar participants. As a reminder, as Ness said, you're welcome to ask questions through the Q&A feature, and I'll attempt to work those into the discussion this afternoon. Polling is back again this week. We have a few new questions, so we encourage you to answer quickly when you see the questions pop up on your screen, and I'll be happy to share the results later in the webinar. Let's start with our first question, Ness, if we can, find out who's in the audience. So we're going to ask you, what type of community do you live in, and is your community a 55 or better community? So while you're answering that, I want to welcome back Jeff Rembaum, and for the first time, one of his partners, Lisa McGill. So Jeff and Lisa, welcome. I also want to welcome to our panel special guest, Andrea Northrop of Insurance Office of America. I will warn you, she is full of good news for the association. So we'll look forward to talking to Andrea later in the webinar. Before I ask them to introduce themselves, I want to remind everybody that we are not intending to give any advice specific to your discussion, to your association, but rather just speak about our thoughts on the items that we are discussing. Obviously, for specific questions related to your association, we encourage you to reach out to your professional advisors. So Jeff, let's start with you. A few quick words about the firm.
Sure. Thank you, Craig. Hello, everybody, and thank you for joining us today. K. Bender Rembaum is a community association law firm where we exclusively practice in this body of law. We have 19 lawyers, 8 of whom are board-certified experts in the field. We have offices in Palm Beach County, Broward County, Hillsborough, and Miami-Dade by appointment. We have loads of online webinars, so you continue learning all sorts of new impact of new laws and new outcome of court cases. We publish Legal Morsels, and we publish Rembaum's Association Roundup, where I'm happy to tell you its new home is in the Florida Community Association Journal. Craig?
Thank you. By the way, listen, I do read the Rembaum Roundup every 2 weeks it comes out, and it's excellent. So I highly recommend if you don't read that, get on his Just mailing list because it's a great tool. Lisa, did he miss anything?
Thank you.
Well, of course not. No, but I do want to say that it's really great that Castle is providing all of these educational resources for our community leaders and CAMs out there. And this is a very difficult time for everyone, and having this type of a venue appropriate would really make community association operations a little bit easier, I think.
Fantastic. Well, Lisa, welcome. Thank you for those kind words. And Andrea, can you give us a brief introduction?
Absolutely. Thank you, Craig, for having me. Andrea Northrop with Insurance Office of America. We are a national firm. We have actually 2 international offices now, and I specialize in condominium associations and homeowner association insurance risk consulting. I came over from the dark side or went to the dark side, depending upon who you ask. I'm a former attorney, and we specialize in finding the best homes and the best risk management for all of our clients. We're actually the 13th largest privately held agency in the United States. Thank you for having me.
Well, Andrea, thanks for being here. And audience, I am a little intimidated, 3 attorneys and little Craig, property manager. So I'm going to try and hold my own here.
You hold your own just fine.
I do welcome you aboard. Panel, I thought we would continue to build on the theme that we started last session, which was running the business of the association in the current environment. So with that in mind, I wanted to just run through what I thought we'd try and cover today. We've got a quick current legislative update. We're going to talk about technology tools, the big 3 technology tools really, correspondence delivered electronically, Zoom meetings, and e-voting. We touched on those last week. We're going to dig a little deeper. Then we're going to talk about the insurance environment, and Andrew's going to give us some updates on what's going on in the insurance world. Excuse me, we'll talk a little bit about budgeting, and then if we have time at the end, answer some specific questions. So, Marinez, can you post the answer? Let's see who's attending this afternoon. We have about 29-30%, about 70-30, which is, I think, the split we get fairly consistently. 70% condos and condos and co-ops, and 29%, 30% HOAs. And Is your association a 55 and better community? 35% yes, 65% no. So it's a pretty consistent group, I think, but nevertheless a diversified group, which is great. Let's jump in, Jeff. 5 weeks ago, we waited on the governor to issue an executive order extending the state of emergency. He extended it at the last second, finally, for 60 days, now set to expire unbelievably 3 short weeks from now. So we really have to start again to think about the impact of the lifting of the state of emergency declaration. But on the legislative front last week, very few changes, I think, although I do know that some New Yorkers will be happy. Can you give us the latest update?
Sure. We know that the governor's state of emergency is due to expire on September 7th, and we still have the eviction and foreclosure moratorium. Remember, that moratorium is only for non-payment, so it's not for violations. You can still go to court and have somebody removed or evicted for violations of the governing documents, but that moratorium for non-payment is due to expire September 1st. Pretty much everybody that we speak with thinks both of these orders, well, certainly the state of emergency order and possibly the eviction foreclosure order, will likely be extended again.
Excellent. Anything new specific to Palm Beach? I don't think so, right?
Well, a little bit, yes. The local mask order was extended in order 2020-016, for those that like to look them up. That was 2020-016, and it is extended through August 23rd. We also have some new fines in play as well.
Lisa, anything in Broward?
Well, we're still operating under 2022 and 2023, both of which were from late July, but there are a few points that are worth reiterating. Of course, everyone knows that gatherings are limited to 10 persons. That's both inside and outside. The property owner or the property operator, which would include the association, is responsible for compliance. So individuals can be held personally liable for compliance, every individual being subject to a fine of up to $1,000. In Broward, we have this business compliance tracker, and you can see when people file complaints or register complaints with the local code enforcement or Broward County, and it is somewhat unfair for the association to be subject to fines as a result of owner violations, failure to observe the appropriate protocol. But none of my clients have experienced that, although the code enforcement people do come on site for random inspections and are giving warnings pretty frequently.
Good stuff. So I think, you know, we're kind of falling into a steady state in terms of the regulatory environment, which is interesting. And my gut says it's going to stay like that really until something dramatic happens, whether it's with respect to testing one way or the other. So our boards are in a kind of steady state mode, I believe. Well, thank you for those updates. Let's move on to technology tools, because I think it's very relevant. We're getting a lot of questions and interest from our customers. So last week, again, we started to discuss this and I wanted to continue that dialogue today. 3 trends we wanted to address. Number 1 was the use of electronic correspondence to replace regular mail, meeting platforms in this environment, and then e-voting again. So first, with respect to electronic correspondence, you know, the owner's election to accept official correspondence from the association electronically, normally by email. But before we get your guidance, Jeff and Lisa, Nez, could you please post poll question number 15? Does your association have a program to allow owners to elect to receive official correspondence from the association electronically? So Lisa, while our participants are answering that question, I'll ask you a 2-part question if I can. First, is the right of an owner to be able to make this election in the statute or in the association declaration? And 2, is there anything that the association has to do if it wants to send correspondence electronically?
Well, in Florida, all of the statutes that govern community associations have the option for the association to request permission to use electronic correspondence in lieu of mail or other methods of correspondence. A couple of things to think about, though, because once you have consent to use electronic correspondence, the information that you utilize for that correspondence becomes part of the roster. So once you start collecting those, make sure that you update your rosters so that you have that included in the roster. There are a few items for which the electronic notice or electronic correspondence is not appropriate. The statute does not allow them for notice of recall meetings. Most recalls are handled by written consent anyway. The statute does not allow them for the opt-out notices for the retrofits. Most of the associations have already taken that action. And of course, you're never going to use electronic correspondence or maybe as an additional correspondence for delinquency notices, notices of violation, things along those nature.
And so, just so I understand, the association who wants to do this, they can elect to do it. They have to collect consents from the residents?
Yes, they have to have something in writing from the resident that says that they consent to use of electronic correspondence in lieu of another method of notice. And of course, with the information to which the correspondence is furnished. Now, you mentioned email. In my experience, it's 100% email. Now, I do have a couple of clients that have the WhatsApp type of notice, and in the past, I guess people used fax as a method of notice, but at this point, it's email. That consent does not have to be some real formal or complicated legal type document. Anytime you have something in writing from the owner saying, I consent to electronic notice, here's the email address I want you to use, and that consent can be revoked by the unit owner at any time.
And can they email that consent?
It's not specified. I mean, again, email correspondence is written correspondence. But I prefer to have something on file that includes their signature or includes their actual check mark on a consent form. We're going to talk about electronic voting later, and there's also a consent associated with that. And most of the programs out there have it built into the program where you click to consent to the electronic voting. So that is, that's perfectly an appropriate option as well.
Excellent. I think for our listeners, the whole email correspondence, electronic correspondence, has one huge benefit, and that is cost. So we're going to talk a little bit about budget shortly, but if you can simply e-blast these packages to owners, if you can e-blast, an annual meeting package, e-blast a series of amendments to the documents, its cost can mount quickly to over $1,000, thousands of dollars. So I think there's a huge opportunity here. Ness, let's see who's doing this. So can you post the results of the poll question 15? Wow, so now we have about 55% of the associations represented are allowing the residents to accept electronic correspondence, and 45 not quite there yet. So I think we're going to see that grow over time. We're seeing lots of activity here. From a management standpoint, on the boots on the ground, like our job is really to make sure we're tracking those consents. It's our job as a management company to make sure we know when people want to opt in, when they want to opt out, and those types of things. Jeff, let's jump into the topic of meetings. But before that, Ness, can you post poll question number 19? There's two parts here. How frequently are you holding board meetings? And if you are holding board meetings, are they in-person, virtual, or both? So as a refresher, we get some questions about whether or not the emergency powers allowed me to have a board meeting without a notice. So I don't think that's the case, but Lisa, can you tell us what effect, if any, the emergency powers have on notice requirements for meetings?
Well, the emergency power statute says that you must give notice, quote, as practicable. We're not in a situation, in my opinion, that warrants any association trying to avoid the regular notice requirements of the statute. You want to make that easier on yourself by obtaining the consent to use electronic. But again, furnishing the owners with notice is not something that is insurmountable under these circumstances. Posting notice is not insurmountable. So in my opinion, I do not recommend anyone try to avoid any of those notice requirements.
And in fact, I'd also add to that, Craig, that if you're going to rely on the emergency powers, there needs to be a nexus. You can't just jump into them because we're in the state of emergency. You actually need to have the exigent need for invoking the use of those emergency powers. There needs to be a rational basis relating back into them as to why you chose to use them.
Yeah, I think that's great advice, Jeff. And you've
That's true.
reiterated that before, which is there are 4 emergencies, not because you forgot that you had to post notice in 48
Correct.
hours.
Well
That does
said.
not constitute an emergency. Jeff, a couple of questions on Zoom type platforms, and Zoom must be very happy because everybody refers to these platforms now as Zoom meetings. So they've scored a marketing coup there for sure. But Jeff, for those boards that are conducting meetings using platforms like Zoom, 2-part question. 1, is it acceptable? Does the statute allow it? And 2, I know that owners are allowed to speak on any item on the agenda. If you're holding a meeting on Zoom, can they chat in their question? Is that sufficient? You know, what is your guidance relative to owners speaking on agenda topics?
Sure. Absolutely. It's really interesting because Chapter 718 absolutely perfects the right of the board or committee to have electronic meetings. And for those that want to read about it, you can go to 718.112, subsection 2B5, for those that want to really drill into it. Oddly, Chapter 720, the Homeowner Association Act, does not have a similar provision. So then that begs the question, can the homeowner association, can they have electronic board meetings? And actually, Chapter 617, the Not-for-Profit Act, because remember, at the end of the day, all of our associations are companies, and the type of company more often than not is not-for-profit. And in Chapter 617.0820, subsection 4, that perfects the right of all not-for-profit companies in order to be able to have the use of electronic meetings, so long as the directors can simultaneously hear each other. That is the key. And you also have the statutory compliance of the owners who have a right to speak. And there's 2 issues that come into that, Craig. One you asked about and one I'll bring up. First one is, can the members themselves, do they have to have a right to speak, or can they only post their questions in? I don't think, by typing them in the Q&A, if you will, or the other methods that the Zoom platform and some of the other platforms provide for the background texting, if you will, in the background. So you're going to text your message into the board. I don't think that's the same as giving an owner their right to speak. You have up to 3 minutes to speak, and you can say quite a bit in 3 minutes, especially if you speak very quickly. Just because you have a right to speak, it doesn't obligate the board to answer, but clearly the member has that right. And I think we're not really following statute if you're just going into the written form. So I do think in the long run, that's going to be problematic. In the short run, during emergency powers, and we're trying to figure everything out, maybe it's going to slide a little bit, but I think as we move on and as technology progresses, boards, you absolutely need to find a way for your members to be able to verbally communicate with you. And most importantly, remember, in the condominium context, we'll borrow from that body of law. All of the board could be traveling around the world. They all would call in to a central telephone, a speakerphone. The speakerphone needed to be in a room so the members could hear and the members could participate. So we know that the participation is a very important feature in the legislation. We need to perfect that for the members. So I don't like the idea of saying, no, association members, you cannot talk to the board. You have to do everything in writing. That doesn't seem to fair. It doesn't seem to fly in the face of it seems to fly in the face of the legislation. The other issue that came up the other day, question came in. We have 900 members. Our Zoom platform only allows for 100 to attend. Can we have our board meeting? And the answer to that is, I think that board, when they held that meeting, they did run afoul of the statute because they didn't allow all of the members to participate. Whoever that association is, I'm sorry, you're going to have to jump up from the $16.99 a month plan on Zoom. You're going to have to spend $1,000 a year so all of your members can participate on the Zoom platform. That's not to say any action taken at that meeting is invalid. No, I think the actions taken are still valid, but I think you deprived the majority of your members from participating in that meeting, and you should probably have another meeting and disclose and ratify everything that was done at the prior meeting so members do have that right to communicate to the board, because we're not there to run the association in a vacuum. We need to be responsive to the membership.
Yeah, I think that's good. We're hosting a ton of Zoom meetings, and it's like anything when you start using software. You do your first meeting, and oh my God, you can chat in questions. This is fantastic. And then you do your 50th meeting, and oh my God, you can allow people you can mute them on the way in, which is wonderful. And then, you go to your 100th meeting, you go, oh, by the way, you can allow them to speak as well. So I think as we use the technology more, it's becoming more and more practical to allow residents to raise their hand and speak on an issue. So I think that is good guidance, Jeff. Thank you. Let's post, Marinez, let's post results of the how frequently are you holding meetings. So good news is it looks like boards are still holding regular meetings, which is good. Most monthly, some quarterly, some are not, which is a little bit scary. I think, Jeff, given we know decisions are getting made out there by board members probably, and maybe, if not properly adopted, we could have a problem. Is that a fair comment?
That is a very fair comment. If decisions are being made outside of properly noticed meetings, then you need to at least ratify those decisions at a properly noticed board meeting. You should not be conducting business on a regular basis around the statutory requirements, thinking you can just, have a meeting later and ratify. Yeah, you can when it happens inadvertently, but not as a way of doing business 24/7.
Well, that's interesting. I think that's a subtle difference to just doing it, knowing that I'll ratify it later. Interesting. And then the second part of that question is, if you are holding board meetings, are they in-person, virtual, or both? And a lot of virtual meetings, which is why we're talking about it this afternoon. Some in-person meetings, of course, there are still social distancing and gathering guidelines. And then both. We are starting to see some associations have people back into the clubhouse for meetings, but not very many. And one of our webinar participants or listeners texted in, can we have a meeting outside even if we have more than 10? And I guess, Jeff, the answer is yes, right? As long as you're maintaining kind of the social distancing and guidelines, you're fine. Is that correct?
Sure.
Okay. Well, Lisa, one more question on Zoom meetings before we leave this topic. We know that you can record Zoom meetings, and we know people do record meetings, but should the board meetings be recorded? And then should they keep the recording after it's done?
Well, for purposes of recording, it's just like when you record or audio record a board meeting held live, the record becomes an official record of the association if it's retained. So the preference would be to record the meeting solely for the purposes of preparation of the minutes. But for Zoom meetings, we just talked about board meetings, you can ostensibly hold membership meetings via Zoom, or at a minimum through the hybrid type of situation. And there is a procedure in the Not-for-Profit Corporate Act that allows a corporation to enable its members to vote remotely. But in my opinion, if you're going to be voting on anything, voting on particularly the election of directors, because there you have to maintain the secrecy of the of the electorate's selections. But even if you're voting on something like waiving reserves, you're voting on amendments to the declaration or other types of amendments, I think the electronic voting option is your better bet. So let's go back to the recording in the minutes. Now, when you're preparing minutes of these meetings, they're called minutes, not hours. So the minutes really just need to reflect who was there, time and date, of course, opening to meeting, reflecting the fact that notice was given and the actions that were taken at the meeting. I often see recitations of all of the complaints made by the owners, and then there's always arguments over whether the commentary is editorializing the actions of the members or how they said what they said. And it's not necessary to include that level of detail. Really, it's just for the purpose of determining that you had a quorum for the meeting was properly noticed, and here's what actions we took at the meeting.
That's really funny. I will use that line again. And in fact, we always say when we're asked to take minutes, do you want us to take the story of the meeting or do you want us to take note of what actions are taken as a result of the meeting? So
well, that can always come back to bite you in the end. After the hurricanes that we had in the 2004-2005 session, the insurance companies were always requesting 10 years worth of meeting minutes. And then if you had these long soliloquies in the meetings where people are complaining, my windows are leaking, my windows are leaking, my windows are leaking, that can really vitiate your claim.
Board members, less is more when it comes to taking minutes. A scant recitation of what took place.
Great guidance. And Andrea, I see you nodding your head. We're going to get to you. I promise we're getting to insurance soon.
We're almost there.
We're almost there. Jeff, quick question that did come up. Number one, I think with respect to meetings by Zoom, you can still hold meetings by the old-fashioned conference call
Sure.
program as well,
Absolutely. Yes, sir.
right? And then the 3-minute rule, is that a statute-driven rule, or is that?
It is to a point. Board meetings are covered, membership meetings aren't in one of the statutes, but we know a reasonable time at least is somewhere between 2 and 3 minutes. Certainly no less than 2 minutes from a prior DVPR position, but I think 3 minutes is really the standard.
The standard, okay, thanks. Okay, guys, let's move on to the last of the kind of big 3 technology platforms. That is electronic voting. So Ness, let's post question number 17, which is, does your association allow for owners to vote electronically? And then while we're doing that, seems that this has been around for a while, Jeff and Lisa, starting to gain some traction, I think, in this world where we can't physically get together. It's particularly relevant given that we're quickly approaching the annual meeting season, if you will. So it's not just as simple as saying, okay, we're going to do electronic voting. Jeff, where in the statutes do the governing statutes provide for electronic voting?
Indeed, they do. Yep, they do. We're going to start with the Condominium Act, 718-128, the Homeowners Association Act, Chapter 720, in subsection 317. These are not subparts of other legislation. These are actually their own sections within the legislation. So it's set out because of its importance. In order to utilize electronic voting, an owner must first opt in writing. So you absolutely, when you have the members opt in to receive their communications via email electronically, at the same time have them opt in to the electronic voting. What's interesting is when you vote electronically, it counts towards quorum purposes. So if we had a live meeting and everybody showed up and all the members are there, we have a quorum for sure, right? Everybody's there. Lots of things can happen at that meeting of the members when you have a quorum in place. But in an electronic voting fashion, even though you have a quorum because it counts towards quorum because the member voted, you can only consider for the electronic voting those items that were pre-noticed in advance. You can't bring something up on the fly at that meeting for the electronic vote. So it has to be pre-noticed. So there is some protection there for that particular circumstance.
So Lisa, I know there's some very specific things the association has to do. Can you kind of walk us through? I decide that I want to offer our residents the opportunity to vote electronically. What does the board need to do specifically?
It's so easy, Craig. I mean, my clients have been so happy, thrilled with this electronic voting. I mean, obviously different platforms have different capabilities and ease of function may differ from different platforms, but really the only thing that the board just needs to adopt a resolution that contains certain procedural issues. Most importantly, describing to the members how they opt in and giving them a time frame for opting out. So the members can actually vote, they can opt in to electronic voting per meeting. They don't necessarily opt in on a permanent basis for electronic voting. And that's why having one of the platforms that verifies the member does want to vote electronically is really important. Now, the board meeting needs to be noticed 14 days in advance. So it's not just your regular 48-hour posted notice. But that being said, it's so easy. You work with your attorney, just make sure that they vet the program that you desire to use to ensure that it complies with all of the requirements, and adopt a resolution, give everybody notice, and give them a period of time to, quote, opt in or provide you with their contact information so that you could upload that and provide it to the platform that you're using.
Yeah, Lisa, it's unbelievable how easy it is. Sometimes the things get overly complicated, but it does seem to be very simple. I think what we recommend to our clients is, one, pick a platform, and there's 3 or 4 platforms. Pick a pricing model. There's a couple of pricing models, one of which is, an unlimited license for an unlimited number of votes. Another one is, a per vote type of a cost agreement. Get with your attorney, properly get the notice written. Get it sent out, get the consent program organized. Now, as a management company, we do a lot of that coordination for you, but it is a great platform. Marinez, interestingly, will you show the results of the poll? And, some early adopters, right? Not very many yet, but I really think this is this is going to be a something that moves quickly over the next, as we get this meeting, as we get through the pandemic and as we start to get into election season. I think we're going to see a lot of this, which is fantastic. So guys, I want to move on to insurance. So Jeff and Lisa, take a deep breath, and we're going to get, oh, can you
Wake up, Andrea.
wake up, Andrea. And Andrea, I'm glad you're still here. You know, you've lived the dream I live every week, which is ask a question and listen for half an hour to an attorney speak. So you're welcome. I'm living this dream as well. Before we open up the discussion on insurance, Ness, can you post question number 18? Have you consulted with your insurance professional since the pandemic started? So hopefully everybody has, Andrea, but we'll see. So let's turn to the topic of insurance. And, you know, we're all curious. Have you seen any COVID-based claims yet?
We have not COVID-specific related claims as it relates to exposure for bodily injury, illness, disease, or death. We've definitely had a lot of threats, potential threats, or, you know, somewhat building claims, more so on the small minority. I would say probably about 5% in any one community, where they're still upset that the amenities are closed down, or we've seen it where they've opened them up and then they're closing them down again, and that's created some additional threats of suits, but nothing as it relates to actual exposure contracted through the association or its negligence.
I think you made a great comment when we spoke earlier this week, which was, if you're closed, it's difficult to make a claim against, you can make a claim against the association that the amenities are closed. That's, I think, that defense would be covered by most policies. Is that correct?
So what you're primarily going to be looking at for those board decisions is going to be your directors and officers policy. And those policies are built with the expectation of enforcing governing documents, rules and regs, statutes, advice, you know, memos that you're receiving from your attorneys with regards to what to do. What your directors and officers policy does not absolutely cover, and it's very broad, it usually says arising out of or related to bodily injury, illness, disease, death, sickness, emotional distress, and mental anguish. And so if you're looking at the comparison between those two, which one's probably going to get you covered, the decision to keep it closed and somebody who sues for not having access to the amenities is far more likely to actually have insurance coverage than the suit of, I want you to pay my, you know, ICU medical bills because I got it in the mailroom.
No, Andrew, I think that's great guidance. And we get asked this question all the time. And we know board members are getting pounded by that vocal minority because the pool's still closed or the gym's still closed. And I think, you know, the guidance Andrew just said was, you're going to have a much better chance of defending a lawsuit. Jeff, you could comment as well, and Lisa, but you're going to have a better chance of it being insured if you didn't open than if you did open and something happened. In fact, I think what you're saying is if you do open and something happens, you're in trouble from an insurance standpoint.
Very much so. And that just from the review of the initial policies that are going to be out there, I mean, there's a couple standard carriers in the general liability marketplace where they have built into their policy form a communicable disease exclusion, you know, for the very much the expectation. Nobody foresaw a pandemic per se, but, you know, there's always been flu and there've been bacterias and different things, and they don't want that closed environment that condos necessarily create or common areas create in homeowners associations. They don't want to defend it. And so really what you're looking at with that decision and opening up is, if I open this up, am I comfortable self-defending and self-insuring any potential lawsuit and or judgment, as opposed to, do I have insurance for the decision to keep it closed?
Wow.
Andrea, what's your preference? Condominium building has kept all of the amenities closed and has also prevented contractors from coming into the building for, you know, you just bought a unit and they want their contractors in because they want new wallpaper, they want new paint, they want to move the cabinetry around, and the association says no, and the owner says, well, I can't use my unit. Next thing you know, the owner sues. Is it better to allow that owner to let the contractor in, maybe with a side indemnification agreement, or is it better to keep that contractor out from your perspective?
Am I getting blood from a stone from the unit owner when I try to enforce my indemnification agreement if we actually get sued, or do I have assets that I can actually go over? So that's the
Sure.
Attorney in me coming out, which is, you know, kind of like the waiver is the value of the paper it's written on and the enforceability. So if I have to look at the two of it, there's not going to be, so directors and officers policy is not going to pick up everything. There's always going to be exclusions, and there might be an exclusion for any particular value associated with the reduction of value of the unit itself. So if they say, hey, it was a hot market in April and the market's gone down by 25% and I couldn't remodel my unit over the summer, which was my expectation to flip it, and I was going to make $1 million, the directors and officers policy, while it might afford defense coverage for the decisions of the association, may carve out judgment or loss as it relates to reduction in value for those. In the same way that if the board decides to paint the building, bright fuchsia or something, and they say you've reduced the value of my unit because of the color you painted, you're going to be afforded some defense under the policy most likely, but the judgment itself may not be covered.
Well, would you rather have a lawsuit
from
would you rather, from the insurance agent perspective, have a lawsuit brought by the owner? He just bought the home, but he says he can't use it because we're not letting the contractor up there yet.
Right.
So he files a lawsuit versus letting the contractor in, and next thing you know, 5 people get COVID.
Absolutely, because the judgment, whatever it's going to be at the end of the day, is probably going to be far smaller as it relates to the inability to have access or the value of the building, as opposed to the potential of sitting on the wrongful death claim, and a wrongful death claim that we're fairly certain is absolutely going to be excluded from any coverage.
Well,
interesting.
So stay
I
conservative.
think it's important to note that it's not an all or nothing. It's not an all or nothing. You as an association can develop your own internal protocols to minimize or even prevent the transmission of the virus. So if you're confident that you have the ability to maintain that level of control, whether it's over a contractor or whether it's over the owner, then it may be very advisable for you to allow that work to take place. I know in Broward County, real estate agent or real estate services are considered now essential services. So you have to allow in-person showings so long as they comply with all the appropriate protocol. You have to allow inspections to take place. It's really, the onus is on you as an association to ensure that the people that are entering your building remain in compliance with all the protocol that you've developed.
Absolutely. And unfortunately, when it comes to the insurance, it's all just going to be the suability versus liability, and the portion of it that's going to be either covered by the insurance carrier or that's going to be excluded by the insurance carrier. So most of COVID communications with our clients has been very specific with regards to, here's what your coverage affords, here's what it does not. Speak with the attorneys, listen to the executive orders, and then you have to, and your property managers, of course, to decide what that program is going to be, and whatever you decide, then follow it to a T.
Sometimes as attorneys, we think more about the nuts and bolts of what's going on, and we don't take into account that this is a residence. Most of the properties that we represent are residential properties, and people have to live there. The board members have to live there. They have to live there with the decisions that they make. So anytime that you can come to a happy medium where you are engaging in risk avoidance, and so long as you have that level of control, again, if you have owners that are just out of control, you're really limited to shutting down all the services, then I think that's important for community operations and community living.
Craig?
Yeah.
It's back to you.
Let's move on, guys, to legal defense insurance, because I think that, we've talked about it in this webinar before. Andrea, what are you recommending to your clients? Are you selling policies? What are the pitfalls? Can you give us an update?
Absolutely. So legal defense as it exists is a new product, and that's definitely one of the caveats that we put out there. It's not your regular standard tried and true general liability policy or directors and officers policy. And I have only had experience in actually having to file a single claim on a legal defense policy, only one so far. And it was a positive experience when we went through it. The caveats, I think, are very important for people to understand what it is and what it is not. And that it to be very clear that it is a defense only, and we're talking attorney fee defense only. It's not picking up any costs. It's not picking up expert witness. It's not picking up depot fees or travel fees or some of the things that you would normally see covered under a standard insurance policy like your general liability. And again, I think as we see more coming through, we're going to have a better idea of how it actually played out and the value of it. We go explaining it on both sides, which is we know very clearly the majority of insurance policies have some exclusionary language where we are fairly certain or feel somewhat comfortable that there's not going to be coverage for it. And we've got these secondary companies over here saying we will defend COVID-19 related claims. So we have to present that to our boards and let them know it exists and see how it's going to move forward. And then it's just a cost benefit analysis, which is, listen, if you can afford to risk, let's say for one of them, $20 a door if that's what it is, and it ends up defending you, that can be fantastic. And if it doesn't end up being positive, was that worth the risk that you had? But I think everybody has to evaluate exactly what it is and what it is not before they decide if they're going to purchase it.
Are a lot of people, what in terms of percentages, what are you looking at in terms of people that are buying it versus making the decision it's just not worth the coverage? Can you give us an estimate? Put you on the spot.
Percentage wise, probably not, but I can tell you I sold way more from March until August than I sold ever prior to then.
Right.
And majority of the clients are willing to take the risk financially. But I don't know what we're going to see long-term, if that's going to continue to pan out as we see whether or not we start having those COVID-19 related negligence claims coming in.
Right, that's fair. Okay, so now for our webinar participants, it's budget time. Andrea, we're all curious as to what the insurance markets are doing. Can you give us an overview of the market and what we can expect on renewal?
Absolutely. This is why I'm going last, because I didn't want to sour anybody's stomach at
Sit
lunchtime.
back, everybody, put on your seatbelt.
You got it. So with the big deep breath, I tell them, especially for a lot of our catastrophic exposed communities, so those that were looking at 3 miles in from the coast, which is probably the majority of the viewing area of everybody in Florida, they are seeing on average right now between 20 and 40% premium increases on the property. The older your roof is, and by old, some of the carriers mean 2008 or older, we're seeing greater amounts. And for some of those carriers that are taking, maybe on the low end, they're taking the 20% increase. They might give you a 20% increase, but you no longer are eligible for the 2% hurricane deductible. You have to go to the 3%. Or if you were in the 3% expiring, you're now going to be at the 5% hurricane deductible. So it's not just rate that's really affecting people. If where we were a year ago saying budget 10 to 15%, those who are coming up for renewal right now are definitely going to be in budget shock for the next 4 months of the year. I definitely wouldn't wait to the last minute, I think, to your point, to have these discussions and prepare. The general liability side, we're probably seeing another at least 10 to 15% on general liability. And directors and officers, you're going to realize, I think if you're on the low end at 10% on your directors and officers policy, you're doing fairly well.
And that's a lot. That's a lot of money for a lot of our associations. Is there anything that, our boards can do to mitigate?
Right now, I think you need to see what it is that might be dragging down your costs. So for one of my associations, they knew that they were coming up on a roof project. And so if they can continue moving it forward faster to get the roof started, as soon as hurricane season ends, or, as close to it as possible, and get it done maybe before the January renewal comes into play. So we're now operating with a new roof. That's going to be significant. If they're voting upon, opening protection requirement for the building, that's going to be something they're going to be able to do from a reduction or credit perspective to help them out or make them a little bit more marketable. More than anything, it's just be realistic with the expectations of what's coming. The other potential double whammy for my condos that are subject to that every 36-month appraisal update is that if it's been, 2 years and 9 months since you've had your appraisal done, don't just factor in the rate increase on the property alone, factor in the rate increase on maybe another 10 or 15% more of insurable value you're going to have to purchase at the time of renewal from that new appraisal.
Wow. And you also spoke earlier in the week when we talked that there are actually some non-renewals. So the market is tightening as well.
The market is tightening. We're seeing carriers who were aggressively going after something 3 years ago, refusing to even quote or changing their underwriting guidelines. If the roof is not new enough, not providing quotes any longer, whereas they might have just not been as competitive previously. The Florida Association of Insurance Agents sent out a notice, a bulletin a couple weeks ago, and it said, agents and agencies need to be brushing up on their citizen submissions. Because it's looking like we might be at a point where we're going to start putting people back into citizens because of the regular market is not going to hold them.
I mean, I think, one of the experiences we typically have when we talk about insurance renewals is, we wait, the board waits, the insurance agent waits, and you're right down to the end, and all of a sudden you have 5 days and you get the last quote and it's a big surprise. So tell us a better process.
Absolutely. So as much as possible, it's communication. And so it, gave this as an example when we spoke earlier in the week. In addition to the fact that rates are going up, there's a lot more marketing because we're seeing these really bad quotes coming in. So our underwriters are inundated. So they're getting up to everybody late. So if you have, maybe your renewal quote is in 30 days out and it's astronomical. It's a 38% increase. That would be a great time, communicate to the agent, say, listen, we don't need to have all of the marketing done before we finally sit down and have this discussion. Contact us as we see these figures coming in so we can brace ourselves and say, okay, we know right now, worst case scenario, our renewal quote is a 38% increase. And then we're willing to wait up until, the 5th day or the 7th day before the renewal, before we make a final decision in case one of those other markets might come in with something more competitive. So it's something that's more educational knowledge, and it's going to require a lot of touches through the renewal process. But I also give the big caveat, price and cost are two different things. So if they're just shocked from sticker shock of the price that's coming in, don't be so quick to buy the cheaper policy without understanding too, because it's a rush decision at the last minute, that you might have given up a significant amount of coverage to save yourself a couple $1,000s. So again, lots of questions, lots of touch, lots of communication.
And when are the rates normally available? Is 30 days the window, 30 days before renewal? Anything earlier than that, or is that typically the time frame you're talking about?
The majority of carriers at the earliest are going to release them 30 days prior to the renewal. And in fairness, some of them have been releasing them 18 days before renewal or 10 days before renewal. And it's a communication where, if you're hounding the underwriter and they're not getting that information, it's going back to the clients to let them know. Majority of them, the statute says, okay, 45 days prior to renewal, they have to send out a notice of non-renewal if they intend not to renew. So a lot of them send these, conditional notices of non-renewal with the expectation that you're going to submit back to them and then they're going to provide a new quote, but they're not on the hook to provide a new quote. So where I would say 2 years ago, 30 days prior would be very reasonable. Right now, some of the carriers are half of that.
Well, I want to post the results of our poll question was, have you talked to your insurance agent during the pandemic? And, 2/3 have, which is good news. My gut is the other third are going to call their insurance agent this afternoon and start to get in front of this insurance issue. I will tell you that we are arranging insurance financing, insurance lines of credit with the banks. Given these big increases, how are you going to pay for it? How are we going to adopt it? So we're doing some of that. And Jeff, I'm going to throw you a question I didn't ask you earlier, which is, normally associations can borrow money. Is there anything we should be concerned about as an association if we're going to go get a loan?
That the loan documents are set up correctly. So many times, loan documents, even from experienced lenders, they come to us and they're wrong. They're collateralizing the real property of the association. That's a big no-no. We collateralize the assessment regime, and either through special assessment or through the general assessment. Some lenders have started doing that now. It's just very important that it's set up correctly. A lot of associations think that when they initially approve the loan, because they get the 1-page 8.5 by 11 short story, the loan summary sheets, that they want to move forward, they think that's approving the loan. No, it isn't. They're not approving the loan until all the documents have been received, the entire package, the attorney has reviewed it, the edits are made, and then the resolutions that the lender wants are actually read into the minutes at that board meeting. Because every lender, when they're loaning money, wants certain resolutions to take place, and you actually have to make sure they take place. Otherwise, we as lawyers can't write our opinion of counsel.
Yeah, I think that's exactly right. You have to get the attorney involved for sure to make sure it's going on right. Andrea, that's a scary news for us. Are you doing a lot of meetings with your clients, I guess, these days?
A lot of communicating, absolutely. So some of it's by email. We might just have, the head of an insurance committee, or we have a point person on the board that we're passing along the information to. But it's definitely a lot of touches multiple times where we might have had, 2 or 3 prior to the renewal meetings. We might be talking 10 times.
And I think for our listeners, just to emphasize the message here, I think you really need to get with your agents to see. We're in the middle of budget season right now at Castle. We've prepared, I think, all our preliminary budgets. Now we're starting to get this detailed data around insurance. I think you really need to be prepared because, it's going to be at the high end of what you say. Those are material changes to most budgets. So you need to understand, and I love your guidance with respect to price. You can slash coverage and reduce your price. That's normally a given. Whether that's the right answer right now is a completely different question. Jeff and Lisa, your thoughts about the insurance market? What are you hearing from your clients?
Lisa?
Well, my clients are experiencing ridiculous increases in the renewal rates. It just seems universal that they're all experiencing increases in the renewal rates. I understood for property, and property is probably the most expensive coverage that they have, but even the D&O coverage, or I'm sorry, even the liability coverage, we're seeing 20%, and that's a little bit more of an expensive policy. The D&O and the legal defense policies are not as costly, so those percentage increases aren't going to affect you as much, but it's a scary proposition. And I really want to reiterate that you can't shop insurance on price. You need to talk with your agent and understand the differences between the coverages. What are the exclusions? What kind of coverage can you add back in with an endorsement or what have you? I have so many clients that were put in a horrible position because they didn't know wind-driven rain was an exclusion. They didn't know that subrogation claims were now excluded. So that's important. You have to have that discussion. You have to understand what the coverage means, not just that you are buying a policy and give me the cheapest one.
Yeah, I think that's good. I think as a general rule, people think if they have insurance, it covers it covers anything that could happen to me, and that's clearly not the case. Jeff, anything to add there?
I see it. It's hard to believe, but I see the insurance companies denying more and more claims rather than owning up to the terms of the policy. So I think we need to be prepared for that. I just saw, as we just started today's session, that there's a group of lawyers seeking class action status multi-district litigation against the insurers for denying business interruption claims based on COVID-19. So we're going to be hearing a lot about that in the news in the coming days. I'm a firm believer in insurance and having as much insurance as you can possibly afford. Even though I know the insurer is going to go out of its way to deny the claim, I still want to make Andrea very happy because I want to get as much insurance as I possibly can have, because I want to go fight the insurance company later on that coverage determination. But if I haven't purchased it, I can't fight that fight.
Jeff, that's exactly the tack I take as well. And really, yes, the increases are significant, but they are what they are. The market is the market. I think, if you go back, Andrea, you were sharing with us in 08, we're still lower than we were in 08.
Sure.
So again,
we kind of peaked in 2013 and then we went down to 2018 where we were dropped, 60 to 70% of where we were in 2013 even. So we're coming back up. So people, they kind of forget they might have had 5, now they went to 3%, now they're down to 2%. Now we added 10% ordinance or law and we added wind-driven rain. You're going to start going in the opposite direction now.
I think if I'm like any other board member, I remember bad news better than good news. So I don't remember the days when I saved all the money, but I certainly am I'm upset about the fact they're all going up right now. And your great update, thank you. I want to move on to budgeting, and I think it's particularly relevant. Do we show the results of the poll?
No, you have not.
Oh, can you show the results of the poll? Sorry. Have you consulted with your insurance agent? My bad. Is that up? Can you see that, Jeff? Can you give me a
Not yet.
share results?
There it comes. There we go.
Oh, so there we are. So 70% of those have talked to their agent, and 30% haven't. And I'm going to guess they'll be all calling their insurance agent this afternoon to start to get an update. So one quick question that came in, Andrew, before I leave insurance, is defense insurance the same as gap insurance?
It uses that as a title. So it says they call themselves legal defense gap insurance. There's 2 primary carriers out there right now. Atlantic Mutual is one and Bold is the other, with the primary understanding being that if one of the underlying scheduled policies, directors and officers, general liability or property denies a claim, then they're stepping in for the defense only portion.
That's the okay. Thank you. Couple quick questions on budgeting. It's that time, as I said. It looks like we're going to see some material increases in insurance. There's some question of whether the delinquencies will increase. The whole COVID thing has taken way longer to
plan on it.
We all thought.
Yeah, Craig, plan on it.
Plan on it, yeah, for sure.
I think we have associations. You need to plan on your delinquency rates going up as we come through COVID-19. Yeah. As soon as the lenders are allowed to foreclose, as soon as the evictions can take place, and the courthouses open back up again, I think then we're going to really start to feel more impact.
Interestingly, across our associations, we've seen a 1 to 3% increase in delinquencies, which isn't really moving the needle. but we're now
Not much.
into 6 months of challenge. So it'll be interesting to see those people that are paying quarterly, what happens in October as we continue to progress along these lines. There's COVID related costs we have to consider. Is it going to go away? Do we have to budget for it next year? I think there's lots of questions, and we'll get more into the budgeting topic, I think, in the next webinar, Jeff, as we talk about what's going on. I want to move to just a couple of questions if I can. Andrew, a question for you. Can an errors and omissions policy be effective for the association?
Errors and omissions is in effect what the directors and officers policy is.
Same thing?
So,
okay, good question. For Andrea, these increases predominantly for condos or both condos and HOAs?
you're going to feel it more on the condo side for the property. The general liability side on the HOA is where you're probably going to feel a little bit more of the oomph. And on that side, I think I would be more aware of what your loss history has been, because some of the carriers aren't bothering to take a high increase. They're just non-renewing.
Right. Well, and Jeff, for you and Lisa, can an association reserve for insurance deductibles? Is that a normal reserve item?
Is it normal? I don't know that it is normal. I have certainly seen it done, and I think it's commendable for those that do, so they are prepared depending on the amount of that deductible. Remember, in HOAs, you only have statutorily protected reserves if the community votes in favor of actually protecting that money. Otherwise, it's just a forced savings account for some future board to squander on a non-essential project. So make sure you're protecting your reserve monies in the HOA setting. In the condominium setting, I think it's a fabulous idea. Lisa, you represented quite a few condos down south. What are you seeing your clients do?
I mean, typically, if you're budgeting for an insurance deductible, I wouldn't call it a reserve, because a reserve is typically a capital expenditure or funds retained for a capital expenditure. But yes, I'd always like to see that to be considered in the budget, and that will also help you a little bit if you have some bad debt. So even before any type of a claim, having some of that extra money in your operating account may work towards your advantage. But you need to, as association, you need to let your residents know what they're facing if there is a substantial claim, because some of them just don't understand that the deductibles on wind claims are enormous.
Right, and I would much rather see a community take 5 years to build up that deductible amount than all of a sudden needing it overnight.
Yeah, I think what we're advocating for our customers is have a plan, whether it's building a reserve, whether it's arranging an emergency line of credit to fund a deductible if something happens. You have to consciously plan for that as opposed to react to it when it happens.
Very much.
Well, listen, guys, we're at the end of our hour. Andrea, I want to thank you so much for joining us. That's great data. A bad message, but great delivery. So I appreciate that. Jeff and Lisa. Jeff, always a pleasure. Lisa, thanks for joining us. For our listeners, I would add one thing. It's census time, and every thing you look at says the census isn't being properly completed. It's really important. We're sending messages out to our communities because it's going to dictate the funding for the state of Florida for the next sometime, with 4 years, right? A census every 4 years. 10 years. Oh my God. That's the Canadian in me, and I apologize. We encourage you to go and complete the census. We're sending reminders, so please send a reminder to your community. Everybody, thanks so much for this afternoon. Really appreciate it. A lot of fun, and we'll look forward to catching up soon. So take care.
Thanks, everybody. Thanks for tuning in.
Thank you.
You do.
Thank you. Goodbye.
Everybody.